Welcome to The Explainer. Today, we're pulling back the curtain on something pretty fascinating: the sophisticated strategies the ultra-wealthy use to build and protect their fortunes for generations. We're going to unpack the tools and, maybe even more importantly, the mindset that lets them control their own capital and create a financial legacy that lasts. This right here, this quote, is a total game changer. It's that light bulb moment. The second you stop seeing your mortgage or your car loan as just your debt and realize it's a high-performing asset on the bank's balance sheet, that's when the big question hits. And that single question, that's the key. It leads us right to the first core strategy that family offices and wealthy individuals use to take control. It's all about flipping the script so that cash flows to you, not away from you. Okay, so first up is the wealth builder's mindset. This is all about shifting from just working for money to making your money work for you. Before we dive into the nuts and bolts of the actual tools, you've got to understand this fundamental shift. It's not about just saving more, it's about becoming the architect of your own financial system. See, the real goal isn't just to have a bunch of different investments scattered around. It's to build your own private financial ecosystem. When you do that, you break your dependency on traditional banks. Instead of having to go ask for a loan, you are the loan. That is the ultimate form of financial control. All right, so how do you actually do it? How do you start becoming your own bank? Well, the first powerful tool in this whole blueprint is a concept known as infinite banking. Think of this as the engine room for your entire personal financial system. Now, I know what you might be thinking when you hear life insurance. Don't tune out. In this context, it's so much more than a death benefit. It's basically a supercharged savings account that you own and control. It grows tax-free, and you can access the cash whenever you need it. It's a dynamic financial asset. So here's how the magic happens. First, you capitalize your bank by putting money into this special policy. Step 2, you access that capital by taking out a tax-free loan against your own cash value. Step 3, you put that money to work, invest it in your business, buy some real estate, whatever. And then, this is the key, you pay the loan back to your own system with interest. It's a completely closed loop where you're always in control. And this is where it gets really, really clever. Just look at this table. Your family bank borrows from the policy at a low rate, say 5%. Then it turns around and lends that same money to your own business at a fair market rate, maybe 10%. That 5% difference, that's your profit margin, and it goes right into your family trust. You're literally making money on your own money, all while the original capital just keeps growing inside the policy, totally uninterrupted. Okay, you've got your bank set up. That's the engine. Now you need to build a fortress around it to make sure that wealth lasts for generations. That's where we get into the legal architecture. We're going to look at 3 key structures that make up this generational wealth toolkit. First up is the dynasty trust. Honestly, think of this thing as a financial time capsule. It's a special kind of trust designed to last for hundreds of years, or even forever, depending on the state. The assets inside are protected from creditors, lawsuits, and, crucially, a whole bunch of taxes for your kids, their kids, and so on. And here's why that's such a big deal. Look at this number, 40%. That is the massive, flat tax rate for the generation-skipping transfer tax. It's a huge wealth killer. But a properly structured dynasty trust is specifically engineered to legally bypass this tax, preserving a huge chunk of capital every single time wealth passes to a new generation. You can really see the difference when you put them side by side. A standard trust, it's often a short-term tool that ends after one generation. But a dynasty trust is built for the long haul. It's got way better tax efficiency and asset protection that lasts for ages, not just a few years. It's playing a completely different ballgame. All right, next tool in the toolkit, the Family Limited Partnership, or FLP. The easiest way to think about this is creating a family-owned company. You pool assets together, like a business or real estate, and the older generation manages it while gifting ownership shares to the younger generation over time. The huge pro here is gifting. Every year, you can gift shares of the partnership to your kids or grandkids tax-free, up to the annual limit. Over time, that lets you move a significant amount of wealth out of your taxable estate. Now, it's not a simple DIY project. These are complex and can be expensive to set up right, so you need good professional advice. So what about giving back? That's where the philanthropic piece of the puzzle comes in, with something called a donor-advised fund, or a DAF. It's basically your own personal charitable savings account. You make a contribution, you get an immediate tax deduction, and then you can recommend where that money goes over time.
And for a lot of people, a DAF is just a much smarter way to go than a private foundation. I mean, look at this comparison. A DAF is immediate, it has zero startup costs, and it's private. A foundation can take months, costs a fortune in legal fees, and it's all public record. A DAF gives you all the philanthropic impact with none of the administrative headache.
Okay, we've talked about the engine and the fortress, but the modern wealth blueprint has another, often overlooked layer, the intangible asset advantage. We're talking about building wealth with things that go way beyond stocks, bonds, and real estate.
This really means expanding your entire definition of what an asset is. It's about looking for value in things you can't physically touch, but that are incredibly valuable. Things like ideas, brands, and innovations.
The big one here is intellectual property, or IP. We're talking about patents, trademarks, software, copyrights, all creations of the mind. In our innovation-driven world, IP is a powerful strategic asset. And what's really cool is that its value is often completely uncorrelated with the stock market. So when the markets are down, a valuable patent can be a fantastic diversifier. And just look at all the ways IP can create real, tangible value. You can license it and generate a steady stream of royalty income. You can sell it outright for a big lump sum. It can dramatically increase the valuation of a business. And of course, it's a key tool for tax planning. You're literally turning ideas into cash. So, we have covered a lot. Your own private bank, dynasty trusts, intellectual property. Let's zoom out for a second. What is this all really about? After all these complex tools and strategies, what's the ultimate goal here? And this is maybe the most important takeaway of all. These strategies at their core are not just about piling up more money. They're about structuring a legacy. They provide a robust framework to pass down not just financial capital, but also your family's values and opportunities for generations to come. Which brings us to the final and most personal question. Beyond the bank statements and the legal documents, what is the intangible legacy that you're building? Is it about security, freedom, opportunity for the people you love? That's the real endgame. Because ultimately, this quote just says it all perfectly. Financial well-being isn't about hitting some magic number in your bank account. It's a habit. It's the system you build that helps you sleep better at night. And that's what this entire blueprint is designed to do. Create a system that provides security, freedom, and true peace of mind for you and your family for years and years to come.